One stock that's got all our attention has been Wonderla. They managed to have a very successful QIP closure on Wednesday. The company has raised funds to the tune of 500 or 600 crores, which we'll confirm with the management shortly. This morning, the stock trades flat, but remember, it's in a very exciting space of amusement parks in the south. Arun Chittilappilly joins in now, MD of Wonderla Holidays. Arun, good morning. It's Amina joining in. Good having you on the channel today. First up, congratulations. You had a very successful QIP. You want to talk to us about it, talk to us what quantum of funds you've raised and how you would be utilizing these funds.
Thank you, Samina. Thanks for having me on the show. It was a pleasure meeting you as well the other day. So we had raised about between 500 and 600 crores. The exact amount is still being finalized, but it'll be close to the 550 kind of number. And this money that we have raised is going to be used for our upcoming project in Chennai mostly. It's a 500 crore investment that we are doing in Chennai. So this will be used mostly for that. And also for expanding our existing other amusement parks in Bangalore, Kochi, and Hyderabad. So this is what the money is going to be used for.
Arun, good morning. Neeraj here. Just trying to wonder what the outline of or what the business plan could be like, let's say, for the next 3 to 5 years. And actually even want to get a sense from you of the really long term, because a lot of people are now saying that, I mean, you know, in some sense, you have for a bunch of products, global substitutes. You can't substitute amusement parks. So that's the long-term story. But first, the short-term story. What do you do here on? Hopefully, we'll not have another COVID-like disruption. So it's smooth, uninterrupted business flow. How do you see business for the next 2 or 3 calendars?
Yeah, so we feel that, you know, amusement parks are going to be a growing industry in India, mainly because there is a huge dearth of good quality social infrastructure like amusement parks, you know, public parks in our Indian cities. And we feel that because we have such a young population and, such a, growing young population, we need to, be present in at least in the major cities. Our plan is to be present in the tier 1 and tier 2 cities of India. We are currently in 4 cities. We want to be in about 10 cities, as soon as possible. Can't give you a timeline on that, but currently we are in 4 cities and we are working on our 5th project. So we are in a way trying to build our amusement park capabilities and trying to spread across different cities in India. Our focus is mostly on tier 1 and tier 2 cities, so basically capital cities of India, where there's a large catchment of people and a young population. So that's what our broad philosophy is about the industry as such.
Okay, Arun, just one follow-up here, though. In the conversations with investors who have subscribed to the IPO or the QIP currently, or in general when you meet the investing community, is there a sense that investors are warming up towards a business like this in India and willing to pay higher valuations as well? I'm really trying to understand from you, because you would be the first, I mean, you would have the first-hand info, simply because there are no comparables out here, right? It's not an industry which has got peer set on which you can compare. So just wondering. Okay, Arun, just hold on. Just cutting across, just showing before you give the answer. This is the Reserve Bank of India governor arriving at the RBI headquarters, and in about 27 minutes from now, we'll hear from the RBI governor about what the MPC decision is. Remember, this is the biggest news of the morning, or will become the biggest news of the morning, arguably for the weekend as well. So bear this in mind. But okay, coming back, Arun, to the valuation question that I asked you.
I think valuation is a function of the market that we are in. So I think a lot of people all over the world see India as an emerging, growing market, and I think that reflects our valuation. And even for our industry, it's a nascent industry, it's a growing industry. Unlike in the West, where it's already a tenured, it's already a saturated market for amusement parks in the other countries. Whereas India, like I said, it's still a very underrepresented. There are not too many organized players. It's still a growing industry. So I think the valuation kind of reflects that. If you ask me. That's what I feel about it.
Right. Arun, your first half of the year was probably quieter than what the expectation is from the second half of this financial year. Now, this business, from what I understand, may be seasonal in nature because holiday season, winter season, may be times when kids visit amusement parks a lot more. What are we expecting in terms of revenues going into the next half of this financial year? And also, more importantly, over the course of the next 2 to 3 years, do you see this business change from cyclical or seasonal in some ways to more structural all year round kind of revenue?
So an amusement park business is literally a play. You build a park and then you expect people to land up every day. So that people actually have to show up, and there are various hurdles for that. As you know, there is seasonality in your business. There is climate events that can be disruptive. There could be exams. So all these affect the footfalls in our park. So I don't think the nature of going to an amusement park is going to change materially. So I think it will continue to be cyclical and kind of unpredictable in its nature. But what we are seeing is that there is growth and there is demand for this kind of an activity in large Indian cities, and people want to go out and experience new things. And we are not a high repeat kind of business. People don't come to an amusement park every weekend or every other weekend. It's something that people do for a memorable day in their life. So it's a low repeat business. So we do see growth coming into this sector, in this segment in India. And we are kind of bullish on this sector. Some of the methods that we can do to kind of mitigate some of this is to have more group footfalls and also pre-sale tickets. We are doing both, and we hope that the growth trajectory continues.
Also, as compared to global peers, I understand that it's for Wonderla specifically, capex may not be as high as some of your global peers. Correct me if I'm wrong there, and also more importantly,
sorry, I lost you there.
I said what I want to understand from you is how high is capex for you as compared to some of your global competition or peers in that sense, and also what are break-even timelines, right? A chunk of the money you're raising in this QIP or have raised in this QIP will be directed to the Chennai amusement park. When and how will this break even? So what is the revenue flow in that sense?
So our Chennai park will be operational towards the end of next financial year. We expect roughly about 8 to 10 lakh footfalls in our park in the opening couple of years, and it should break even in the first year itself. But at a PAT level, it will break even in year 4 or year 5, depending on how the footfalls grow over the years. But at an EBITDA level, it should break even in the first year, as that's the kind of expectation we have for Chennai.
Yeah, you did mention that you're looking to move or of course expand beyond the south market, right? I believe states like Madhya Pradesh, Uttar Pradesh, Punjab are on the map. Do we see this becoming reality in the next 2 to 3 years, or this is more of a 5-year sort of plan?
It's a 5-year plan. I think we want to expand to other cities. But these are large capex, large gestation projects. So it's not easy to, get a park up and running within a couple of years. It takes its own time. But yes, we are confident that we should be able to expand to other cities going forward.
Got it. Arun, just wondering, there are analysts who track you who say that your per plant capex and therefore the IRR or the break even is much lower relative to global standards. Would that be true? Would you have some comparable numbers that you could share with us?
Yeah, so Wonderla believes in keeping its capex relatively low compared to global peers. The way we do that is we design our own parks, and we do a lot of the work in-house instead of contracting global companies. So we make a lot of the stuff in India, and that helps us become competitive and keep our capex relatively low. So that's something that we do consciously over the years.
Okay, but no numbers per se, but it is lower than global comparables is what you're saying, right?
Yes, I mean, I think we, yeah.
Okay. Okay. The other question, Arun, is around growth. Now, you've given a clutch of figures around what could happen as a result of this capex, when do you break even, etc. What about growth rates per se? I mean, when I look at what you've done, let's say FY23, about 430 crores, you grew about a 10-12% growth in FY24. Is that the benchmark or base rate that one should anticipate out of your business for the next 3-4 years? Or could it actually expand with the number of parks moving up? I mean, is there a J-curve effect, or is it a linear 10, 12, 15% growth story?
So the linear 10 to 15% growth will continue from our existing parks, and that's what we are hoping to do. The jump in growth will come from our new projects like Chennai and whichever other parks we kind of sign up on. So we expect to grow faster than the 10-15% at a company level, because we will have new parks coming into the fold.
This is linear year on year, more than 15% growth, or is there a step up year based on when some of the parks are coming on stream?
I think the FY27 we will see a step up because Chennai will come on stream. Till then, I think we can expect a 10 to 15% growth. Yes.
Right. Also, before I go back to talking to you about expansion for the next 5 years for different states, will you come back and do an equity fundraise? Because I'm assuming most of what you're raising right now will go towards Chennai. Once you complete Chennai in financial year 2026, my question then is, how do you expand into Madhya Pradesh, Uttar Pradesh and Punjab? Would you return back to the markets for equity, or would you look at going into debt or internal accruals? Getting a sense of how healthy the cash flow is to fund these 1,500, 2,000 crore upward of expansion.
See, our business already contributes roughly 200 to 250 crore of cash flows annually to us. So that money, that internal accrual, we will be using for also future projects. We are not looking at any further equity dilution. This is happening because we are just finished opening our new park in Bhubaneswar, and we have done we are doing another large project in Chennai. So because of that, we have done this fundraise. We are not expecting to do any further equity dilution. We might take on some debt, if new projects come, but that's not immediately.
You also interestingly have resort offerings, right? And you've had success with the 84-room resort in Bangalore. Copy-paste on that, would you look at expanding into the hospitality space more, maybe constructing hotels at their resort parks like you have in Legoland world over?
Yes, so that's a plan that we have as well. Our resort in Bangalore is 84 rooms, like you said. We are expanding it by another 40 rooms, and that should be ready by the end of this year. And part of our QIP proceeds will go for that as well. We hope to do that in other cities going forward, but not immediately. We are waiting for Chennai to come on stream, and then we will plan resort expansion as well.
Arun, any merit in having these resorts attached or connected to the amusement parks? I've not been to the one in Bangalore, hence I'm asking you to give us a sense of that. And also, what sort of ARPU's growth are you working with there?
Yes, of course. We do feel strongly that resort business is kind of allied with the amusement park business. As our footfalls grow in our amusement parks, we definitely need to have resorts around it, like you see globally. And we are also expanding our resort offering in Bangalore, like I told you just now. Our ARPU growth has been also healthy. I think we grow between 8 to 10% in our ADRs for our resort business as well.
Just very quickly, so this 10 to 15% growth rate that you told us about, that includes revenues that could come in from resort properties, or that's over and above?
No, that includes resort. I mean, right now, whatever is there is including the resort as well.
Got it. Okay. Well, wishing you all the best for this and more. Keep on giving people great entertainment days. Arun, thanks so much for taking the time out and speaking to us.
Thank you so much.